Thank goodness you're here. I think the feelings seem to be pretty common. Most people thought a Fed rate cut was coming, especially if you lived through the financial crisis. Yeah. I remember January where we had that big cut. That's not a surprise. I think they would have been criticized if we dropped another 44,000 points and they hadn't done a cut, right?
That's correct.
So do you think that the cut was a bad move, an okay move? What now?
I think that it's an intermediate step. I think that the Fed was right to step in an attempt to bolster financial conditions. Mm-hmm. Perhaps it will put a floor under the market, create some stability. But let's be honest, the Fed rate cut cannot fix the problem in supply chains.
Right.
Monetary policy is not designed to offset supply shocks that are going to begin cascading through the U.S. economy over the next 2 to 4 weeks. And I think what was more important was Mr. Powell's presser, where he clearly stated we're going to need to see action from the fiscal authority, right?
Right, that's what he's saying, multifaceted participation, right? That's what he's looking for, some fiscal stimulus.
Now, I know we're talking to people who invest in trade, and we're always going to be concerned about the market first and foremost. During the crisis, boy, I remember being on the floor with you all those years, right? This is a bad acid flashback to some difficult times. Then we were ring fencing the financial industry. Monetary policy is really suited to that. Nicole, I don't know how you ring fence the real economy, right? That requires a different form of policy, a much more sustained form of fiscal action to target, overwhelm the situation. This is a time where we're going to have an honest discussion in the country on what we want to do about this, right? Because this is the outlier of all outlier risks.
At some point it's going to slow down.
Yep.
Right? It's not going to take out the nation.
Nope.
I don't think so. At some point it slows down, but it's a little bit disconcerting because we know it's something that's evolving and we don't know exactly what comes of it. We look at GDP, we look at jobs. Yep. These are key numbers that you follow closely. How could it affect the numbers? Friday, this jobs report is not going to really have coronavirus in it factored in. So when you look at this Friday's jobs report, what are you expecting? And then what do you expect to see on GDP going forward?
Well, we're going to see about 165,000 on the report. But look,
right. And we had a good one prior.
We did. We're going to have a non-event here. Okay, on Friday. It's just not going to be that important because now we're thinking about what are we going to do as the economy slows down. I'm expecting 1% growth in this quarter, 0.7 in the second, both with significant downside risk. I see 1.2% in the third quarter, and we'll finally get out of this later in the year. Nicole, this is when we need creative policy making. We want to target small and medium-sized enterprises that are likely to see a disruption in revenues. What we don't want to see here is an increase in unemployment and soaring bankruptcies. The Fed can't prevent that in the real economy with its monetary policy stance. That's going to have to come from the Treasury. It's going to have to come from the Congress. And I know the president's tweeting today that we don't need fiscal action. I'm sorry, Mr. President, we do.
And he's looking for more rate cuts.
That's right.
He feels that we're not quite competitive. He has not changed his thoughts that we should have lower rates in order to be competitive with Germany and other countries. So we'll see on March 17th, 18th meeting. You think the Fed may cut one more time, maybe a quarter?
I think it's unlikely that they do that.
Less than a 50% chance?
Unless there's a further unwinding, then all bets are off. Look, Mr. Trump's going to get another 50 basis points this year.
You see 2 more cuts this year,
this
you just don't know when.
Well, I don't rule out a return to the zero boundary either if we have an exigent, unusual circumstance and a breakout of the virus. I don't think that's going to happen because we've got good medical infrastructure in this country and the CDC's on this.
We have a New York City high school closed today in the Bronx, uptown. So, they're being very, very cautious.
Yeah, and we should be. And here's the thing I want to convey to everybody out there. We've all lived through 20 years of crisis now. We went through the worst crisis since the Great Depression. We know what to do, and we know how to do it. We just have to get to it. And that means we're going to have to increase the authority of the Small Business SBA to actually target trade finance and bridge financing for all those companies that might experience periods of disruption and turmoil.
I need a better understanding how you're feeling. Are you worried or are you not really that worried? Going forward about the economy, about jobs, about the supply chain?
I'm extremely concerned about the supply chain and how that will cascade throughout the economy. I don't think that we'll have a recession. I think that what I'm seeing right now, based on our contacts inside DC, is that the interagency mobilization has started. We're going to use the big bazooka of the federal government, its fiscal authority.
And we're coming off of a great economy, so even if we pull back, it's not like we're going right into recession. So you're saying no recession.
No, we shouldn't have one. The only reason why we have a recession is in that exigent, unusual circumstance of a breakout of the virus, and that's really the epidemiologist and the scientific profession. We need to give them as much money as they need. We're going to give them $7.5 billion. I think they need about 15 because that's what they've told us.
Tell me about the sectors, because I'm waiting on some earnings, right? We still have some more earnings this week.
Sure.
Year over year earnings, right? We don't expect too much greatness. Some sectors, where do you expect to see some strength or some weakness?
So the weakness is going to come in the tip of the spear through trade and transportation, leisure and hospitality. There is obviously going to be a curtailment of business travel. We're already seeing that. At the ports, the ships stopped showing up about 3 weeks ago. There's not enough containers to ship our goods to support our exports. We're seeing it at all the North American ports. That's where the first job losses will start. I think that's really where you want to focus early. Now, where there's going to be strength.
That's the weakness.
Yeah, the strength's going to be in tech, right? This virus won't infect 5G. I think there's going to be some really unique opportunities in the tech sector here over the next several months. Once in a lifetime type opportunities.
You talk about tech. I was looking at Zoom, ZM, right? Video conferencing. That has been doing so well through the coronavirus. Now we're talking about maybe more video conferencing. We're waiting on Okta later on Friday, OKTA. That's a technology cloud company, one of the newer ones. Has not been affected at all. I looked at the 1 week, the 1 month, the year. No move, no. What coronavirus? It's amazing. So you think tech is the way to go?
Oh, I completely. And also, obviously, there are going to be certain parts of the pharmaceutical complex that will thrive here. Now, the pharmaceutical complex is going to be part of the supply shock.
Big pharma or biotech?
I would think big pharma is going to do better. Biotech will come on in its wake. There's going to be some issues around supply in big pharma. We're going to have to figure that out. I think we import around 31% of our needs. So that's going to be not so good. But again, a good forward-looking investor knows when to buy. And we're going to be coming up on that quite quickly.